Welcome back to Delta Code Delta Nation. Today I am going to cover some very interesting things. I am going to cover all of these companies, not all. I am not going to cover them all. I'm going to cover a select number of the companies reporting earnings today. Let's take a quick look who is reporting and which ones I will cover. And if it is of interest to you and your portfolio, stick around. I will do the following. I will tell you which companies I am going to cover. Let's say AMD. Then we will take a look at AMD's financials, its chart, its fundamentals, their earnings, their insider buys and sells, and I'll tell you what I think about that company. Sound like a plan? If that sounds good to you, stick around. Don't forget to follow and subscribe, share, whatever. Okay, let's get into it. This week, we have a lot of pretty sweet companies reporting earnings. Some of these I own, some of these I don't. Most importantly, at the end of the week, boom, bam, bop, Coinbase. This is the most important company that I cover the most and that I have most invested in, but there's plenty other good ones that are in my portfolio or have been recently added. So let's get started. First of all, Palantir. Palantir is a technology software company, apparently, or a military software company for Intel. They are expected to report 28 cents of earnings on $1.5 billion of revenue. Now, for a company that makes $1.5 billion of revenue, let's make that 6 for the whole year. How much do they make for the whole year? Bam bop. 12 months, 4. Okay, let's say they're growing at $2 billion per year. They're going to make 6. Okay? Should a company... Hey, boy, come here. Hey, come on, we're making a video. That's my quant. This is my quant. Me and my quant are going to help you do your own research so you can make good investment choices. This is Moon. He does moon math. For a company that only makes $1 billion of net income, should it be worth $350 billion? I don't think so. Okay? Simply put, unless they show earnings of, I don't know, income of $35 billion, then, it's going to take you 10 years to get your money back. Their sales, it's going to take you 78 years if they keep 100% of their sales to get your money back. So that's what that is. Based on my quant math, numbers don't add up for Palantir. Now, if you have Palantir, good job. You probably made money. You probably bought it at $0. What was it a long time ago? It was as low as $7. Now it's trading at 150-ish. It's been as high as 200 at the peak. I don't get this company. I get that they provide military service or intel or whatnot, but the numbers don't add up. Quant? He said yes, if you could hear that. All right. For comparison, I won't leave you hanging. I recently made a Tesla chart that shows how much money they make. Tesla is worth 1.4, almost 1.5 trillion dollars. And they make $3.8 billion of income on sales of 100 billion. Okay? So price to sales is 14, 15. So take them 15 years of keeping all their profits to be worth this much. Unlike Palantir, who it's going to take... Yes, my boy? What are we doing? What are we doing? What are we doing? Okay, my quant needs to explore stuff. Okay. Can you Can you stay there? Can you just stay? Okay. Where were we? Palantir. No bueno. Okay. So Tesla, if you take a look at this, published it on my Twitter. They sold 15 billion of cars, all this other stuff, services, ended up with about $22 billion in revenue. A lot of it is cost of sales. And then they ended up with about $500 million of net income. Okay. For a company that's worth $1.4 trillion, that's not a lot of income. That's why price to earnings is 355. And as I showed on my tweet, their earnings is going down, their sales are flat, and their shares are going up. None of those things are good because that means your value for your shareholders is going down. Okay? Also, there was only one big purchase over here by Elon, trying to manipulate the company, I think, at 389, pretty much at the current price. Everybody else in the company is selling like crazy, okay? So insiders don't believe, they're not buying. So I put Palantir and Tesla in the same bin of overvalued. Next, we have Pinterest and Grab. First, we'll do Pinterest. I like Pinterest. Look at this. Forward price to earnings is less than 10. Price to earnings growth is 0.62. That means they are justifying their growth. Their income is $500 million, but they're only worth $11 billion. So let's just do some math again with Palantir. Palantir made 1.6. Okay, 1.6. 1.6 is, what is that? 4 times 4 is 16? No? Yeah. So they make 4 times the money that Pinterest is making, but they're worth 35 times more. That's so much in my ear. Some purring in my ear. Okay? Either this is extremely overvalued, or if you think these are justified, then you should think that this is extremely undervalued. Let's take a look. Their earnings per share is erratic. I'll give you that. But their sales in billions is vertical, straight up. Okay? And outstanding shares have actually started going down. So this is opposite of your Tesla story, where earnings per share are going down, sales are flat, and the shares are going up. Pinterest, I would think that 2026 is going to be a better year than 2025. So their sales are going to keep going up, and their shares outstanding are going down. They're probably doing buybacks. Okay? Now, let's take a look at their insiders. Nobody's buying, but selling has pretty much stopped. Might even flip to buying at some point soon. Next up, Grab. This is a Singaporean app for, I think, food delivery that has been on my radar. Price to earnings is 58 on income of 268 million. So that's half of Pinterest for the same valuation. Don't you think? Is it not? Right? 11 billion market cap, 14 billion. It's actually worth more, and they make less money. But what's important here is the growth. They're growing like gangbusters. Hey, calm down. We don't walk on the keyboard. Okay, their earnings per share has flipped positive. Their sales are straight to the right. The share count is growing, but slow, right? At $3.5, most of the price targets are above that. Insiders sold here. Ooh, who sold here? A large chunk in April. CEO, not bueno. I don't like to see that. It's only $1.5 million, but they just go public not too long ago. Anyways, this might be a better value if you're going to buy a company that has a high PE. At least the growth is justified. Next up, Shopify. Shopify is at 136 PE, forward PE is 53, and price to earnings growth is 1.6. Not terrible, but not great. PE in over 100 is crazy. So they made $1.2 billion, but are worth 1.6. Just for comparison, let me just look at Coinbase. Coinbase made just as much, but they're only worth 50 billion. So should Shopify be worth 3 times more than Coinbase? I don't know. I don't think so. But the CEO of Shopify is on the board of directors at Coinbase. So I don't know. Maybe he can convince Brian of how to get insane valuations for his company. Earnings per share, erratic. Sales in billions, straight to the right. And share count, pretty flat. So I like what I'm seeing here. I don't like the valuation. I think it can grow into this, but I'm not too crazy about it. And let's see, insiders have a lot of proposed sales. In 2024, they made $2 billion, and then it dropped to 1.2. And yeah, so it's a comeback story. I don't know what happened here in 2022. They lost a ton of money. I don't know. I think it's still overvalued. It's been as high as 180, as low as 100 recently. So I would buy it under 100. I wouldn't buy it here. It still might report great earnings and go up, but I think it's overvalued at these prices relatively to other companies you could buy. Next up, PayPal. PayPal is actually fantastic, fundamentally looking company. If you take a look, it is worth 45 billion, but its income is 5.2 billion, right? So it's 5 times the Coinbase, but it's worth about the same. Its price to earnings is pretty awesome. Single digit, 9.3. Forward is 8.7. Price to earnings growth is 1.4. Price to sales is 1.36. There's hardly any short, about 2%. Earnings per share has been pretty consistently going up. Sales have been going up, and shares outstanding going down. This is an amazing company. I am happy to buy it here. Better to buy it at 40 than at 50, and I bought it. Actually, I started buying it at 60. I started buying it here. I bought more here. I think I'm averaged out to about 50 or 40 in some accounts. So I'm going to buy more probably here before earnings because these numbers look nice. Also, I read an interesting speculative rumor that PayPal might be trying to spin out Venmo, its payments app, as its standalone service, something that PayPal happened to spin out from eBay, right? Same playbook, and Venmo itself should be worth about $50 billion, in my opinion, and they can get that much for it from somebody like Apple. And then you get another, could be 100%, easy 100%. There we are. PayPal is on my radar. It's in my portfolio, and if it's not in yours, I think you should consider it. These are amazing valuations, great cash flow. I don't see anything that is a red flag with this company. In fact, green flags across the board. I'll do another write-up of it. I think I have already in the past. Excuse me, sir. Sir, your bow tie. Your bow tie is slipping, sir. Okay. Next up, one of my favorite companies is AMD. AMD as you can see, has gone from the 200s vertical to 350. This is just whoop, a huge jump. It's worth 560 billion now on a $4 billion income. Okay, 4 billion income. 5 billion income on PayPal, worth 45 billion. 4 billion income, worth 500 billion. So that's a 10x difference, if you couldn't tell. Price to earnings is 130, but forward is 30. So they're expected to earn like crazy. Price to earnings growth is 0.58. What is it on PayPal? Yeah, obviously not as good. This is Moon math. Moon, do you approve? Yes. Ow, ow, ow. Why are you digging? There's nothing there. I'm just making a bet. Okay. You're slipping off. Stop. Okay. Okay, Moon approves of AMD Moon math. Let's see. Earnings per share this year has grown by 64%. Ow. Hey, don't bite. Don't bite. And let's see. Kind of erratic, but I think it's just going to go vertical from here, giving the CPU and GPU demand for AI. What else? Sales, as you can see, has got, it was in their 20s last few years, then it jumped to 34, and for 2026, I would not be surprised if this probably doubles. They can't sell them or make them fast enough. Share count pretty steady. This is amazing. This is a stellar company. I wouldn't be surprised if it doubles in the next couple of years from here. Insiders are selling. No, Lisa, why? At 200, sold 16 million. Had you waited, you could have made another, whatever, $10 million, Lisa. Why did you sell? Don't you know your own demand? Crazy. Insiders are all really rich at this point, taking some off the table, but I digress. AMD looks great. I'll put AMD at number 2 spot, or number 1 as of now. All companies we've looked at so far. PayPal is number 1. Next, MicroStrategy, also known as Strategy. This is the company that raises money, sells shares, and buys Bitcoin. They raised another $82 million. And this is basically a high beta play, leverage play on Bitcoin. They have, I think, almost 1% of all Bitcoin. And they just keep buying more. And that's the plan. Buy more Bitcoin. Let's see. They don't have any earnings, obviously. It's just raise money, buy shares. But insiders bought, so that's cool. Not a lot. Not a lot. Yeah, I would not personally buy this because why not just buy Bitcoin? Any instruments that are crypto derivatives or somebody else holds the crypto for you, I'm not a big fan of. You can just buy Bitcoin or Bitcoin ETF if you have to. There's also Bitcoin leveraged ETFs. So if you really believe this is the bottom, Bitcoin at, what is it? What is Bitcoin at? Let's take a look. Bitcoin is at almost $80,000, right? So if you thought at $60,000 Bitcoin was at its bottom, you could have bought Bitcoin itself. You could have bought a Bitcoin ETF or Bitcoin like 2 or 3 leverage ETF to get on the upside. I think those are all better instruments than strategy personally. I only recommend ETFs to my friends and family that are not willing to learn how to self-custody crypto. And for some people, it is difficult, so that's why Coinbase exists. Okay? That's the better option. But let's move on to GLP-1 medication manufacturers and inventors thereof. Novo Nordisk, our favorite Danish company. Novo makes Ozempic and drugs like it. Oral Ozempic pill launched, FDA approved for type 2 diabetes. So you don't even have to inject anymore if you haven't known. There are drugs that are like Ozempic. These are diabetes drugs that help you lose weight. They make you not feel hungry, and if you eat, you feel nauseous. They have been evolving these drugs, and there's a whole lot of them that are in the process of being approved, both by Novo and Eli Lilly. Very exciting. They have been shown to be safe, help people lose 20-30% of their body weight. Only downside has been you also lose muscle, because if you don't eat, you don't exercise, you also lose muscle. So the recent advancements have been helping people preserve muscle while they lose body fat. And if you eat enough protein and exercise as well while on these medications, they have been proven to be one of the best things we have invented in the Western society for our fat population. So I think it's going to be a peptide summer, and these companies will do great. But I want to go back and looking at Novo. Novo has a PE of 12.7 for a PE of 13. They are worth $150 billion on $15 million of income. This is $15 billion of profit. I don't know. Run it back. That is 5 times AMD. That is 15 times Shopify, but they're worth the same as Shopify, right? They make 15 times more profit than Shopify. They have a dividend that is about 4%. I don't know. This might be number one. I think this is number one now. Okay, so Novo number one, PayPal number two, AMD number three as of now. Look at this. Earnings straight into the right. Sales straight into the right. Shares down. Beautiful. What other numbers can we look at that are important here? Price to sales 3. Okay. Seven, 8, 9, 15, 18, 19. You gotta love this profit growth, right? Net income, beautiful. Not a lot of insider transactions. I don't know if that's because they're a European company, they report differently, but this is number one. Full disclosure, I own Novo. I own options for Novo that are long dated for 2028 that are up, 50% by now. I am probably going to buy more before this earnings because this looks great. Number one pick for this week's earnings. Uber, also an interesting one. Uber is worth as much as Novo, right? But Novo makes 50% more profit. Do what you will with that information. Earnings, steady last couple of years. Sales up. Share count down lately. Insiders own 4%. Is there any short? Negligible short. Price to earnings 16. Forward 17. Price to earnings growth 4. Price to sales 3. Okay. I like that. Not bad numbers. This may be let's see what the insiders are doing. CFO bought at 71. Bought 1.6 million. When? In February. Since then, there's been some sales by people, but I like to see at least one single buy, but mostly selling. I would not be opposed to adding this to our portfolio now. Still not this great, not jumping off the page great, not this great, single digit jumping off the page great. Okay, so let's see, we'll do Novo, PayPal, AMD. We'll line them up like that, and then we'll do Uber there. Okay, ARM. If you got arms, got an arm, there's no harm. This is a semiconductor UK company, mega cap. Is it mega? 200 billion, 217 billion on 4.6 billion of sales and 800 million of income. Ooh, terrible. I hate it. Why is it worth it? Why did it double? Maybe we'll find out this week, but as of now, this is an insane price. Insane in the membrane. Earnings steady, sales up and to the right, share count pretty stable. Nobody is buying on the insiders, and yeah, I think this valuation is insane. Worth $200 billion. They make less money than Coinbase, but they're worth 4 times more. No thanks. Next, Datadog. Now, when I say no thanks to ARM, of course, they can show like $3 billion of net income. And that's a huge jump. But can they keep growing to $6 billion next year and then $20 billion a year after that to justify the current valuation? There's a lot of it is baked in for future profits. So I don't think it's worth it. Datadog, 489 priced earnings, worth 50 billion on 100 million of income. Again, we're always going to compare it to our favorite company, which is Coinbase, also worth 50 billion on 1.2 billion dollars of net income. 12 times more profit, worth the same. Is this company worth this much? They're expected to show great earnings, but let's see, unstable, great growth, growing share count. I don't like any of that other than the sales. Yeah, this does not look like a $50 billion company to me. Yeah, I would sell this, especially if after earnings we had a spike. Now, I wrote about Datadog before. Datadog is useful if there's going to be more software companies, and with everybody using AI, I can imagine, let us imagine, that everyday people start building apps and using AI tools that require Datadog as its data source for organizing all this. Datadog could see a huge spike, and I do believe they will. But I still don't think it's justified at the current level of their business. Okay, now, not the last, but definitely my favorite, Coinbase. Coinbase is at $202. If you don't know, better ask somebody. Coinbase is here. I wrote about it. Okay, we'll do this here. We'll do that there. Bim, bam, bop. Okay. Coinbase was as high as 444 in, what is this, early August or late July. It has slid down, especially October 10, there was a big DeFi meltdown. A stablecoin depegged on an exchange due to a bug, which caused a liquidation domino effect across the entire crypto industry. The biggest liquidation event ever of close to $20 billion got just erased. And then since then, we've been just sliding down with occasional upswing. And now we have been in a crab market since pretty much beginning of this year until now, with Coinbase reaching 139. I think it was the lowest point in February. Since then, it's been as high as 215 and as low as 160, going up between 160 and 200. Price to earnings is 46. Forward is 38. Price to earnings growth is 3, and price to sales is 7. $1.2 billion of income, worth $54 billion. We have jumped around to this one as our litmus test of whether we should buy a company or not, or think it's fairly valued. Coinbase may benefit as Senate banking sets May markup for clarity. Digital bill compromises on stablecoin yields and rules. Yes, if clarity passes, Coinbase will benefit. Now, on my Substack, I wrote a deep dive on Coinbase for a 2030 insane forecast. First, I tell you what has been happening. I give you a preview of what to expect this week. I am expecting a loss of 30 cents, revenue of $1.57, $1.6 billion. Okay, that's what to expect this week when Coinbase reports on Thursday after close. I feel pretty confident in that, as always. And then I compare crypto to the oil industry. ExxonMobil and oil prices, as you can see, as oil prices go up, ExxonMobil share price goes up. Similar happens with crypto. Coinbase goes down when crypto prices go down. Look at this. It's pretty much an identical thing. Coinbase is a high beta or a derivative on crypto. Why do I invest in both crypto and Coinbase? Because I like pain. Stablecoin transactions have outpaced Visa since 2024. Just FYI, that's why this Clarity Act thing matters. If it passes, this will be good for Coinbase. More stablecoins, more revenue for Coinbase, as Coinbase makes, guess how much? $333 million, I expect, from Circle's partnership. They get 50% of their profit. Now, Circle was at 70 billion. I think it's at 78 now. Let's see. 78, probably 80. Let's see. 77. So Circle, Coinbase USDC is at 77. So that number actually might be bigger right here. No, actually it won't, because this is where it was when I made these calculations at the end of March. So guidance for Q2 for this will increase because this has gone up. Okay, it's going to go up by 10%, 360 million probably for Q2. So one variable we can count on going up as of now. Q2 just started. Let's go back to take a look. Okay, erratic earnings per share. You have your bear market years, you have your bull market years, and then you have nonsense in between. Pretty stabilized sales at this point. Share, I don't like the share count, how much it's growing. Let's see what else. Insiders are probably selling always because, yeah, nothing but sales from insiders because share count is growing. They're just printing shares. They're compensating with shares. So when you look at Coinbase's expenses, it doesn't show the full picture of how much money they're spending. So I don't like that, but I still like this company for many reasons. And here is the main one. This is my bear case scenario. I expect the share price, worst case scenario this year, to go to 240. Right? So that is, what is that? 20%, right? 22% according to this from here. By 2030, I expect it to go up 154% or from the current price to about 500. That is a compound annual growth rate of 25%. The red line is the bear case scenario. The blue line is my base case scenario, which is better. And green line is the insane bull case. What do I expect? This is the earnings trajectory to be pretty stable negligible growth as they grow their shares, as they grow their revenue. EBITDA and free cash flow also growing steadily, and then the revenue mix mostly to be more transactions and stable coins. For the base case, I expect it to reach about $800 by 2030. That is a 300% increase from the current price. Okay? That is a 42% annual growth rate, compound annual growth rate. Okay? That's the blue line. Similarly, I just expect greater earnings. This is also a lot of, what do you call it? Why does it do this? No, give me a second. Boom, bam, bop. Boom. So this is a lot of assumptions such as Bitcoin price, share count, margins. A lot of these things go into calculating how much the company is going to be worth, including what is the multiple that is being given to a company that's growing. More they grow, more growth gets priced in the future. Something you've seen for companies that I don't like Tesla. They just have insane growth baked in. And honestly, for Tesla, a lot of that is execution risk. So the company's current valuation is a lot of future perfect execution and profit. And all you're going to get is the current valuation being right later. And you're taking on this massive risk of them not executing, of competition beating them, and things like that. So, something I don't like. Anywho, I don't like that. Boom. There we go. Back to Coinbase. And this is the bull case, about $1,300 by 2030. This is a 567% growth from the current share price, or a 60% compound annual growth rate. You're getting $1,300 a share. Worst case scenario this year is you're going to get 50%. You're going to go from 200 to 300. Not bad. This is obviously a hopeful scenario where crypto adoption really grows through the roof. Maybe agents start using crypto, and not necessarily just Bitcoin going up, but Ethereum becoming much more used. This is just a 4x in earnings per share from the best performing years so far. So from 10 to 40. Obviously, all these numbers straight to the right. Usually crypto isn't like that. There is a dip down, but then a vertical up, but it smooths out over time. Okay, so this is like a dip from 24, 25, slight dip. And maybe even 26 will be a dip here, and then we have a upward trajectory. Here are some of the assumptions about valuations, price targets, market cap, and then I compare it to Robinhood. Robinhood has honestly been a better performing stock but Coinbase has been making more money. See, Coinbase is the blue, Robinhood is the green, but Robinhood has better margins. You would have made 70% on your Robinhood while being pretty much flat on Coinbase if you started in May of 2025. So if you held for a year, Robinhood would have been a much better buy. And it pains me to say this because I'm heavily invested in Coinbase. And here is other competitors I use here. We got Robinhood, SoFi, Block, Coinbase, and PayPal. As you can see, PayPal is at the bottom, even though it is one of our top picks here based on their current valuation. So just because you're at the bottom of this list doesn't mean that it's justified. But I think in this case, Robinhood is the best performer. I think PayPal should be there 1 or 2 based on their numbers. Maybe a mispricing in the market on PayPal, if anything. Okay, so let me know which company you would like me to do next. I've touched on Novo, Robinhood, AMD. We have Trade Desk and HIMS also as options for me to cover. Let us move on to Mercado Libre, our favorite Latin American giant. This is a, let's say, Amazon mixed with PayPal of Latin America. 47 PE, 28 forward, price to earnings growth under 1, price to sales 3. It is worth only 100 billion with 2 billion in income. Let's see, their earnings per share have been going up. Sales have been going up in vertical, like really nice. Share count flat. I would not mind picking up. Okay, Mercado Libre. I'm gonna slide Mercado Libre as number 4. Yeah, number 4 after AMD. Maybe even in front of AMD. Novo, PayPal, Mercado Libre. I really like it. Obviously, Coinbase is gonna take a. We'll put it after Uber. Wait, what's Uber's? Yeah, we'll put it after Uber. Mercado Libre. Somebody bought 100,000. Very nice, steady. You double from 23 to 24. You double your profit. Amazing. Just expect them to keep doubling. These are pretty high numbers, but for a company growing this fast, this justifies it right here. Not obscene. I like it. Obviously, would have been better to buy it at 1,600 than 18, but it's been as high as, where are we at? 2,600. So it's dropped down by $1,000 per share, guys. So do what you will with that information as our number 3 pick. CoreWeave loses money, is worth 70 billion. It's made 5 billion in revenue while losing money. I guess they have a lot of expenses. I don't know. This is obviously AI infrastructure play. Numbers don't add up for me, so I am not picking up. This is an aerospace defense contractor. War is on. They making more money. They're printing more shares. Still, I don't like it. Should it be worth this much? Maybe. I don't know. If you're watching what Congress does, if they buy, you can buy. So, to recap. Would you like to recap? To recap. All these companies are great, and in the short term, any earnings report is noise. Whether Coinbase reports earnings as I expect, what do I expect? I expect, I think, a loss of 30 cents per share on $1.6 billion. Now, if they make 1.5 or 1.7, if they beat, that's noise. The question is, in the long term, do I think Coinbase is going to make more money and have their valuations expand as they demonstrate more and more profit? I do, because they are adding new product lines that bring in revenue, like derivatives. Now you can trade stocks 24/7 on Coinbase. Market closes and you want to buy, let's say, Novo. Let's use this example. Novo reports earnings when? Novo, before market opens. So maybe on Wednesday, you decide before the market opens, you want to buy Novo. You can do that on Coinbase. They report earnings, goes up, you can sell. For example, Coinbase reports their earnings after the market closes. Let's say you don't like it. You want to sell your Coinbase there and then as you're listening to Brian speak. You can do that on Coinbase. So that's all more revenue for Coinbase because now you're trading stocks, not just crypto. And they're providing you value by being outside of regular trading hours. Also, all in one platform. Derivatives are bigger than spot, and you can trade those on Coinbase. You got options, you got future contracts, prediction markets. Prediction markets. You want to bet on a election because you have some insight on who will win, or speculate on a sporting event. You can do that on Coinbase. So because they've added all these new products, I think they're more valuable than ever. So my predictions for Coinbase for 2030 are conservative, if anything. Anywho, that is it for our earnings preview for this week. Really exciting to see, obviously, Coinbase here, Novo here, AMD here, and PayPal here. So this is, I think, one. Oh, Mercado Libre, where are they? Right here. Really like Mercado Libre. They're number 3. So Novo is number 1. No, number 1. PayPal number 2. Mercado Libre number 3. AMD number 4. And Coinbase number 5. Out of all the companies that we covered, if you have to put 5 in your portfolio, I would put them in that order as of now. Which one has the most potential? I think Coinbase and AMD are my top picks if I had to choose only 2 to put in my portfolio. Alrighty, gang. Me and my quant. Give me a quant. Me and my quant want to thank you for watching. I hope your portfolio goes to the moon like my moon boy. Peace. Don't forget to like and subscribe.